Okay, we have a lot to talk about today. Morgan Stanley's Adam Jonas just came out with a brand new $400 price target for Tesla stock. I have a lot of thoughts. Let's go ahead and get started. Now, before we even begin, not financial advice, not investment advice. I am a Tesla shareholder. I have been a shareholder for a little bit over 10 years now. And yeah, I don't want anything in this video to be taken as something for you to invest your money in at all. Do your own research. I'm just here to really dump my thoughts out there for other people to absorb, and hopefully it's helpful in whatever they're trying to think through. But at no point do I want you to take anything I say as advice. All right. So Morgan Stanley, which is one of the biggest firms, analyst firms, investment firms on Wall Street, just came out with a report Sunday evening, as if the timing wasn't perfect, where they're coming out with a brand new price target for Tesla stock. Here's a post. Thank you, Sawyer, for always bringing the latest news on Tesla and everything EVs. The man who never sleeps. Morgan Stanley's Adam Jonas has increased his Tesla price target by 60% to $400 per share from $250 and upgraded his rating to overweight. Tesla is now their top pick. We believe that Dojo can add up to $500 billion to Tesla's enterprise value, expressed through a faster adoption rate in mobility and network services, which is software as a service. A little bit blurry, but I just want to highlight how they're thinking about this price target. They have it at $400 based on fiscal year ending earnings of 2025, which basically means this $400 price target they think is applicable for the next 3 years. Now, I do want to highlight a couple pointers from the summary, just so you have a good idea of how they're approaching this price target. And some of this may be familiar if you've been following the Tesla story for a little while. In conjunction with this report, we feel it is prudent to include a degree of optionality for Tesla's AI potential into our revised price target, which has increased from 400 to 250, or to 400 from 250 rather. Our bull case valuation is raised to 550, and our bear case valuation is raised to 120. Another way of saying this is Morgan Stanley, Adam Jonas specifically thinks that it's about time for their analyst research group to really start pricing in the potential of all the work they're doing around artificial intelligence and building their own chip. And so what this is doing is increasing their overall price target as they think about these businesses coming into light from their perspective. Another thing I want to highlight that talks about why they think this is a big deal. Tesla management has said it needs as much compute power NVIDIA GPU clusters it can get its hands on, and currently it cannot physically secure the amount of chips necessary to train cars. In addition, they believe they can develop a more efficient system for their specific needs while not funding a supplier's 60% gross margin. And what's interesting about this commentary is that based on what they have gotten from the Tesla management, which they've openly said to the retail communities and everybody else out there following the stock, Tesla is compute constrained, meaning that Tesla has, for the last, say, few months and years, been trying to get their self-driving software to get to a point where it can drive itself. And now with the latest versions that they're releasing, especially with version 12, which is the one that's completely AI-based, and it's basically an AI that's figuring out how to drive, Tesla's thesis is that they're really limited by how many computer chips they can get into their company, not so much how much data they can gather, because they have, almost 5 million cars driving around collecting data. Based on this, Tesla is doing a lot of work with their own in-house Dojo computer, which is the chip that they've created themselves, where this Dojo chip is essentially made to be better than an NVIDIA chip because it's purpose-built for what they're trying to solve, which is what's called real-world AI. They can take video and sort of make decisions based on that. If they are successful with that Dojo chip, what's going to end up happening is Tesla is going to be able to bypass NVIDIA more and more in the future, which means that they're going to spend way less money on their chip, and that chip is going to be significantly more efficient if they're successful at solving AI problems than NVIDIA. But Tesla, again, has been very open in saying we need everything we can get our hands on. And that's a signal that for Morgan Stanley that says, okay, maybe there's something here. Maybe if Tesla figures out the chip stuff and they create this army of chips and compute power within the company, this could potentially mean Tesla has an outsized sort of advantage versus everybody else when it comes to solving for this giant overarching theme now that is artificial intelligence. Now, one of the graphics that they highlighted, so here they're saying, okay, Tesla has this awesome chip in the middle, which is their Dojo NVIDIA sort of compute cluster. And these things are going to enable them to have massive amount of data capture, which we're already seeing with their full self-driving stuff with version 12 and their AI brain learning how to drive. It's also going to attract the world's top talent because they're working on game-breaking things, and they have a ton of really smart people at the company. We also have world's hardest compute software problem, autonomy, which this is going to help solve. Again, that AI is going to learn how to drive, is continually learning how to drive today. And the more chips you have, the better it'll get at driving. The better chips you have, the better it'll get at driving, and it'll be able to drive anywhere faster than anybody else will be able to do it. They also have unlimited access to capital because Tesla is a self-funding business. They're a company that really takes, they make profit on their cars, they make profit on their energy while they're growing, or they want to raise additional capital. They have credit lines available to them left and right that they can very easily tap. And they also say if they want to do an offering of, $50 billion, they can just sell $50 billion worth of stock. And so the vertical integration piece is very similar to how, say, Apple does their thing, where software and hardware are both internal. And that's why their products are always so consistent and they work so well, is because Apple has figured out how to make software and hardware play together. Tesla's doing the same exact thing with their full self-driving chip, their full self-driving software, their own cars. And so based on everything I just told you, how Morgan Stanley is thinking about this, they think the stock price is going to go from $250 to $400 by adding about $70 worth of stock price from mobility, which is that full self-driving stack of self-driving cars driving around, and $59 billion from network services, which is kind of similar to how AWS works right now with Amazon, where they're essentially loaning out their service space, their servers to other people, and they charge a fee and they make a ton of money on that because it's just a software sell. And so after this report came out last night, the stock price opened about 4 to 5% higher. And as of the date of this recording, the stock price, don't ask me how long it took me to get this, $269.69, up about 8%. As of the date of the snapshot. The big question becomes, is Wall Street finally catching up? Is Wall Street finally understanding what the hell is going on with Tesla? This whole notion of Tesla's not just a car company. Is Adam Jonas, my favorite Jonas brother, has he finally figured out that this is happening? And is Wall Street saying, yeah, this is great, this is happening, and we finally got it, let's start investing in Tesla? This is where I want to sound an alarm. This is where I want to take some time to go through my thoughts here, because I think it highlights a lot of what's great about the stock market, but also what's really not great about the stock market. And this is not an investment channel, really. This is not a finance channel, really. This is just, I don't even know what this is. It's just me talking to you guys, and I greatly appreciate everyone's support up to this point. Truly, it means the world to me. But I think it's very important to use a day like today to highlight a few things. So number one, if you've been following the Tesla story very closely for the last, say, 5 years or so, one of the big theses for this story, I don't even know if that's a word, but we'll use it, is that Tesla is not just a car company. Tesla is investing a lot of effort, a lot of time, a lot of resources in things that are outside of their car business through that Dojo chip, through that AI team that's trying to solve self-driving, through that energy business, which is going to go after utility scale solar and batteries, so on and so forth. We kind of start going down the list, and you can find these little niches that Tesla's working. And you got the solar panels, you got the solar roofs, you got this software as a service, or leveraging the hardware on the server stack with the chips and everything that they could loan out to AI businesses that want to use their compute power to solve their own thing. It gets kind of crazy, right? And this is something that Tesla retail investing, community has been on for a little while. And I find it very interesting that once a large investing firm like Morgan Stanley, analyst firm, and a well-known analyst like Adam Jonas comes out and really, eloquently, and I think does a great job summarizing the impact of what this could mean to the stock. Once he puts that research thing out, then the stock market chooses to respond to it by going up 9% in a day. Even maybe it could be up 10% by now. Who knows? But I find that really odd, because that thesis has been there for years. It has been there for years. And it took one person And again, this is another thing, but we'll keep going with this train of thought. It took one person to make an outsized move on the stock market related to things that have been discussed in retail for a really long time. So that opens up a lot of questions for me. Number one, has Wall Street just completely ignored that this is going on and they're finally realizing this is going on? So that's question number one. I find that hard to believe because, you tell me if I'm wrong here, because a lot of people out there in the world that have a lot of money, I would think would have a ton of research, a lot of research teams, and a lot of effort put into understanding fully if there are opportunities out there for people to jump on. I don't think it's a surprise. I think it's just maybe a thing that says, oh, look at this company and this person that we really respect finally said something that kind of aligns with where we wanted to put our money, so we're going to put our money. That's number one. Number two, which I find maybe is probably more realistic, and this sort of talks about why short-term and long-term investing is so different. Again, not investment advice, but this is how I think about it, is that Wall Street in reality in the short term is just a game. And it's a lot about momentum. And it's a lot about how can we jump on a trend that exists because somebody with outsized power and influence has said a thing, and now the thing happens, right? And it really highlights that even though this is a very good day, let's say, for a Tesla investor, a Tesla bull, somebody who has options for the stock, even though this is a very good day for that person, and the opposite for the other person who's got puts or is short, right? It still highlights that this thesis has been there for so long, and it took one person to potentially wake up Wall Street. I don't know. It's very strange to me. It's a strange dynamic that I keep getting reminded of, that investing in a stock, investing in a name is way more psychological in the short term. So psychological in the short term. But in the long term, it's much more reflective of what the business is really working on. And so what's going to be interesting to see in the coming, say, months and years is if, number one, is Tesla going to be able to actually execute against these lofty goals it's set against itself, right? Is Tesla going to be able to sit down and say, we're going to get Dojo done, and it's going to be way cheaper than NVIDIA, and it's going to be way better than NVIDIA, which is going to make our compute ramp way more efficient and way more cost effective and way quicker and way more adaptable because we own it, right? So is number one, not going to happen. But then number two, even if that doesn't happen, Tesla could just buy NVIDIA chips left and right, those H100s, and increase their compute power. And so if that were to happen, then in theory, as long as Tesla's AI approach is correct when it comes to self-driving and the other things they're working on, like the bot, which is right behind me, which sort of falls, if they get that done, then the Dojo equation doesn't even matter, because the amount of money they're going to be able to make from just having real-world AI solving self-driving and the bot and things like that is going to create so much value for the company and for society that how they arrive to that solution doesn't matter, right? So that's where I find this report. Again, great report. I really respect Adam Jonas. Like I said, he's my favorite Jonas brother. I'm kidding, obviously, but he is a great analyst, and I really respect him. It's interesting that even in that report, the true impact of what a world filled with self-driving cars and robots that can just do everything that a human could in a physical form is not talked about, right? It's not talked about truly in depth and what that value generation is. So, and that's maybe because Adam Jonas and Morgan Stanley understand how to speak to Wall Street. They understand how to speak to maybe a group of people, even though they have a ton of money and power and influence and the ability to make literally the stock market go up and down, perhaps they're still not fully on board, or maybe they don't fully understand what is happening. Or it could be a much more pragmatic approach where maybe they do fully understand and fully know what's happening, but they're more of a wait and see approach. Like, let's actually wait and see if this happens, which is completely 100% reasonable, right? And investing, winning and investing, it seems like identifying those things ahead of time, betting on those things happening, and then seeing if the rest of the world agrees with you. I woke up, I saw the price move. I saw the report last night. I was like, okay, we'll see what happens, and I was sort of having fun with it on X, Twitter, whatever you want to call it. But I think it's important to sort of make sure we're viewing this through the proper lenses. That this is great. Of course, if you're a Tesla investor, today is a really good day because it might signal something that's potentially gigantic in the future. But nothing has changed today. Nothing has changed. Everything is exactly the same. Tesla's still working on their thing. Everybody else is still working on their thing. There's still competitors out there trying to figure out how to beat Tesla to the punch. And there are people out there that are actively betting against Tesla, making that happen, right? So, yeah, interesting day. And I just wanted to get something out there. A little bit different format than usual, but I think it was, I wanted to get it off my chest. So thank you so much for watching. If you want to support the channel, subscribe. I'm on my quest to 69,420 subscribers. So if you can help me with that, that would be great. Thank you. And if you enjoy the content, and if you want to go above and beyond, I have merch and a coupon to Athletic Greens in the description below. Thank you so much. I hope you have a great day. Bye-bye.